Hey guys, what's going on? This is Hala Pablo. Bitcoin. Here's another video on Bitcoin. We did one yesterday. I shared a couple thoughts with you yesterday of what I thought we were doing, and I want to substantiate some of those claims I made yesterday with another video which kind of expands on it a little bit with a Wyckoff schematic. Now, this is a reaccumulation schematic. It's put out by Roman Bogomazov, so I want to give this guy credit for this. This is one of many reaccumulation schematics. Typically, we don't use reaccumulation schematics when we're analyzing accumulation, but a reaccumulation is, in fact, a type of accumulation. It's like an intermittent. So it comes after a markup, and then it comes back down, and then it reaccumulates. And then instead of going down, which would make it a distribution, it puts another leg up. And that makes it a reaccumulation. So it's like the second leg of a series in a markup. But what we can do with reaccumulation schematics, we can look at them on the macro, such as this one, and this actually typifies your bear cycle. It's basically a bear cycle is what we're looking at on the macro. Instead of this playing out, typically reaccumulations play out. It takes about, I don't know, like in crypto, everything moves super fast. So a reaccumulation can take a week before it puts up another leg, sometimes a couple days, just depends on how quickly the crypto is going. On the macro, an accumulation in a bear cycle after, let's just say this is the bull cycle, this up here is the buying climax, like right here, back when Bitcoin was up at $60,000 before it had the sell off. This was the buying climax up here. This would be the buying climax on the reaccumulation. And then you have the sell off. And usually a bear cycle can last, for like a year and a half instead of like a week, in a proper accumulation where it forms the bottom. But we see this is basically like a microcosm of what's playing out right now and what I believe we can expect to see in the months to come as we traverse this present bear cycle. Now, I hear a lot of people saying we're in a bull cycle now. We're ever since 16,000 we've marked up and everything's we're in a bull trend now. We're in a bull trend. But I would beg to differ. I would say that we are in a counter trend. We're still in a bear cycle, not in a bull cycle. We're still in the overarching bear cycle. But what we're experiencing is the counter trend top within the bear cycle. It's not a bull cycle. If we were to just go parabolic and somehow without coming back down to remitigate 16,000, if we were to just say from here, just start consolidating and not go down, but just kind of consolidate at 30,000 or between 28 and 30,000 where we are, and then it puts up another leg, and then we have like a typical, like a 1 through 5 impulse Elliott wave going all the way up, back up to the previous high and like mitigating the buying climax of last year's cycle, then I would say we're in an actual bear cycle. But I don't see that happening at all. I don't think it can happen, actually. For one, this area here, let me go ahead and remove these drawings. This valley here, which is like actually the selling climax of last year's cycle, right here, when we reached the bottom, or what some people say is the bottom, the $16,000 Bitcoin back in December of last year. So they're thinking that this is the absolute bottom, and we're just going to go up from here, maybe with some consolidations and up. But I would beg to differ, because this area here that constitutes the selling climax from this markdown that we had is not wide enough. It's not deep enough, nor is it wide enough to sustain the kind of parabolic rally that people are talking about and anticipating. And I'm talking about six-digit Bitcoin. People are talking about this year it's going to go to 100,000. It's going to go to 200,000 or whatever. I don't see that as feasible. I do not see that as feasible. And if it does do that, it's going to be ugly because it's going to be in essence a parabolic rally without any substantiated foundation to support it. I mean, if you try to build a skyscraper, like, something as tall as the Chrysler Building or the Empire State Building on just like a little tiny foundation, what's going to happen? Eventually, you're going to get high enough, and there's going to be structural, damage. It's going to the thing's going to collapse on you. So you have to have a wide enough foundation to support that kind of thrust or that kind of, propulsion up. So as it stands right now, this meager little window that we saw here at the selling climax down to 16,000 and up, that was only from June of 22 to maybe December of 22. So what is that, 4 months? It's just not happening. Bear cycles last a lot longer than 4 months, guys. So I just don't see it sustainable. What I do see happening, remove this drawing, and then let's go back and put this up here. What I do see happening is what normally happens during protracted bear cycles. I see a period of consolidation and accumulation. Now, make no mistake, we're in an accumulation range right now. And but the accumulation range goes through highs and lows in a typical trading range. See, like, let's take this one for example. We have the selling climax here, right? And we have the selling climax here. That's the lowest point. I know you've got some jagged areas here where it marked down a little bit further, but this the way he's drawn this is straight lines, so it could be it takes out a lot of the noise of this extraneous price action that really doesn't count. So like here we have an ABC how he's drawn, but then here we have the descending Elliott wave, the 1, 2, 3, 4, 5, and then the correction, the ABC back up inverted, A, B, C, and then the Elliott wave down again. So for the sake of simplification, so we're going to call this area here, the 16,000, we're going to call this the selling climax, just the same as this area here. The B on this corrective wave isn't shown in this diagram as well, otherwise it would be like that. So just for the sake of simplicity and to streamline it, he drew straight lines. So let's call this the selling climax, and then somewhere up here we're going to arrive at the automatic rally, which was here in this schematic, the AR, automatic rally. Now, the automatic rally can go up pretty high. In this case, there's a dynamic of FOMO in it, greed. People are going to jump in. You know what's going to happen? You're going to hear about it on CNN. You're going to hear about it on Fox News, and it's going to generate a lot of interest into Bitcoin. They're going to say Bitcoin's mooning. Some people are going to think that they've missed the bus, and they need to jump in and buy it before it takes off to $100,000 and they're left behind. But what's going to happen, and that's exactly what the market makers want, because they use positive news sentiment as a catalyst to manipulate the price. And so what they want to do is bleed the herd, because they count on people, retail investors, following herd mentality when it comes to investing, trading on emotion. These are beta traders. These aren't sigma traders. These are beta traders that go off of emotion. What do beta guys do? Beta guys go off emotion. Say like a beta male is interested in a girl, right? What does he do? He thinks that doing, what comes natural, just wanting to be friends with her and being nice to her and listening to all of her problems. I know I'm getting off the topic here. But like what usually happens, he gets friend zoned in the end, right? He doesn't get what he's looking for with the girl, like to become romantically involved ultimately with her. She friend zones him at the same time. So he fails. So the same thing with beta traders when they trade off of emotion and they do what feels right, in which case if you see a news article saying that Bitcoin is like skyrocketing, oh, let me buy in. And the market makers, these guys are the alphas. These guys are the sigmas, so they have the cell blocks in place and the battery of cells and they just cut them right off. They cut their legs off and then they burn them, and then they get caught holding the bag, buying the automatic rally as the price comes back down to the secondary test. Now that's what I want to get to right now, secondary test. Now the secondary test usually mitigates the selling climax in these cases. It doesn't necessarily mean that we're going to go all the way back down to 16.5. We could just go down to 21,000, 22,000, 23,000, somewhere. These aren't always exact into the T, but what's important is the downward wave, that we're coming back down into this selling climax area to retest the previous lows. And then from there, what happens is we go back up. Usually it's pretty quick too. You see how quickly this came up? This was an ABC back up. ABCs are a lot faster than the impulse waves on the other side, than the 1 and then the 2 corrective. The 3 is the longest, 4 is another corrective, and then 5. Usually takes a while with those because market makers are shorting at the corrections, or they're taking profit on the corrections. So it takes time, for this redistribution, another redistribution here. But then on the flip side, it shoots up like a lightning bolt. So you got like the A and then the B reaccumulation in C, and that's going to go straight back up to where it was before around the automatic rally way, and it may even go higher. But it shouldn't go too much higher. And then from there, we're going to have a slow drag, and it's going to go down a little bit, but it's going to be mainly lateral consolidation, which is what this is, a period of lateral consolidation. And this is why real bear markets are usually drawn out. This is deliberate, guys. This is to get you bored and just completely disheartened as to what crypto is doing, what Bitcoin is doing. I mean, imagine after these last 2 rallies and these last 2 retracements, and now someone bought up here and they held on to it because they thought like this was a spring, and then here now we're going to the moon. But lo and behold, there's a period of consolidation, which usually comes, and you see this on these maps here, on these old cycles. If I could blow these up, or rather shrink these back down and use, say, we could do Heikin-Ashi candles. Let's see if I can go back to the old. We'll do like a one. Let's see. Yeah, we were on 1 month, so let's go back and we could do like a daily on here, and you could see the long drawn out periods of the bear cycle. See, here's a secondary test. Here, you see here, selling climax, automatic rally, comes back down, secondary test, goes back up. This is the old cycle. This is an old cycle from 2017. We see it in that. It comes back down again, and this is a slow drag, and then we have a terminal shakeout here. Now, the schematic that I just showed its spring didn't go that deep. It went mid-range, maybe to TR M, which is the 0.5 Fibonacci, the trading range midpoint, and then it shot up from there. It may do that. It may not do that. That nobody knows. Nobody knows. No one has a crystal ball there, obviously. But what usually happens, and what is common with all of these schematics, is you have the selling climax in the accumulation range, and then it comes back up. We have the automatic rally, which is what we're in right now, and then that tops off, and that's kind of like a counter trend, and then it comes back down again, mitigates or closes out the liquidity void that the old selling climax hit. So ours was 16.5 this year. We can come down to about 16.5. We could even go lower. See, that's the thing nobody knows about. But what we can count on is it going back down. See how it went back down here, and then it shot back up real fast. You see how we have this area. I don't know if you could see this. We have these redistribution areas like here where it's green. Like here, this is an Elliott wave going down. This is a 1 through 5 Elliott wave going back down to remitigate the selling climax with the secondary test. And then it shot right back up again, and then a little bit lower than trading range resistance, and then it just slowly bled it back down, came up again. This, over the course of time, this took a long time to play out, guys. Like if I can, let's see if I have a, where is that measurement tool? I always forget where this stuff is. Okay, date range on this. All right, so let's say from like here to the terminal shakeout, that's 149 days, guys. And if you want to go even further to where the actual macro bull reversal began, here, or rather the counter trend, See, this isn't even a true reversal because we're still within this old bear, the bear cycle inside here. And I did a video on this the other day. See this? And it wasn't until we had this retest right here to where the real genuine bull cycle started. And that's when we shot up. We just marked up parabolic, it just, up to the cosmos, like I said. So it's really drawn out this period of consolidation. After we come up, we hit the automatic rally, we come back down to the secondary test, and then we can come back up, another up thrust, a fast up thrust, and then like a slow bleed out usually. A slow bleed out, and this can either just linger here around mid-range before it shoots up and we start the actual bull cycle, maybe sometime in 2024, or we can really go down depending on how deep this recession goes. And we could really bleed out to like sub 16,000 Bitcoin before the true reversal. But Bitcoin will reverse, and these areas, this is good news because when it gets down here, we start retesting trading range support. That's when you know you can start dollar cost averaging, you can start buying in, start doing your Fibonacci retracement numbers, and just buy in at each subsequent Fibonacci. And so anyway, I just wanted to share this quick thought with you today, and hopefully this helps you a little out. Some of those some of you have doubts on what's going on. Just, be cool, let it play out. There's some bumpy roads coming ahead, man. I'm telling you, there's some bumpy roads. We're fixing on hitting a recession, a major recession in this country. I believe they've tried to cover it up politically. The economy sucks. You may not notice it, but I do. Being in business, and I'm an entrepreneur and so I deal with this all the time. I deal with the subprime markets. I owned a car dealership, a construction company, so I know all about it. When the economy's bad, we feel it, regardless of what the news is telling you. So, all right. I'm going to leave you at this, and I've gone on almost fucking 20 minutes. Do you believe that? How long this has been? I'm so long-winded. I'm long-winded right now talking about it. Jesus. So anyway, I'm going to let you go, guys. All right. Hopefully you liked it. Like, subscribe, give me a thumbs up if you like it, and there'll be more coming. We're going to do Matic. We're going to do DOT. We're going to do Shiba Inu. We're going to do Avalanche, and I got some DeFi stuff that I'm going to be bringing to you soon too. So just stay tuned. Make sure you subscribe so you get all the uploads as soon as I get them. All right. Bye-bye. That's it. Bye. Adios.